Hey everybody, Jeffrey Beamer, Senior Investment Strategist over at ewotrader.com. Welcome to the beginning of the second quarter. Today is Monday, April 1st, and start of the new month, start of a new quarter. Refreshing to get back at it after a holiday weekend. And we are going to start today by reviewing our trade that we talked about last week. And then we are going to jump into our headlines and talk about a U.S. market update and then looking ahead. And then at the very end, I do have a trade that we're watching for this week. So let's jump right in and take a look at GameStop. That was the trade that we had last week. GME is the symbol. And the stock had earnings. The stock was moving higher. Now, this is one of the in a strangle, which that is the strategy that we used, and we were expecting a big move for the stock. This is kind of a good news, bad news situation where the stock actually started moving higher going into the earnings announcement and then reversed and started dropping after the post announcement. Now, in the end, we are breaking even in this trade. Okay, this is a break even trade, and we can get out at even money, which is really not as good as making money, but also, break even will take over a loser, right? And this is not to be this is not surprising given this time of the earnings cycle. We have gone through the bulk of all earnings for that first quarter, and now we are in a somewhat of a quiet period before starting in mid-month. We will get moving and a shaken, but there are still earnings, and we'll talk more about that. So GameStop was a break even, and boy, we like those better than than a loss. So let's get into our top headlines for today. Really, it's interesting that we had a economic report on a market holiday, which was Friday, and so this week we started off Monday with another economic report, and markets dropped to start the second quarter. We are trading a little lower, although NASDAQ is trying to hang on. We'll take a look at that in a moment. But everybody else is off slightly to start the quarter as they digest that information. Okay. Now, what's interesting is that the June rate cut odds drop below 50% after a strong ISM data. Now, ISM data is the manufacturing data, and it was stronger than expected, and it was actually positive. So that sent interest rates higher, the odds of a June cut. But what's interesting about that is that there is a tracker called the CME FedWatch tool, and it still shows that a majority of bond traders favor. So this is a little disparity in the headlines here. Maybe that changes as of this morning, but now we're getting a lot of cloudiness on this June number. And for the record, I've been talking June, a kind of just a 25 basis point cut, a gratuitous cut of 25 basis points in June. I've been saying that since January when everybody else was saying 6 cuts this year. I think maybe 1 or 2 at the most, if that. And now all of a sudden that June number is in jeopardy as these stronger data numbers are coming out. And this week will also tell the tale. Now, with this, oil prices continue to rise on strong demand. This is sending oil prices a little higher. National average is going up. I believe it's over 360 now on a national average for a gallon of gas, and strong demand, which is interesting because we're not in the height of travel season yet. As we get to the end of the school year and into the summer, and that's when demand really gets into gear. But stronger demand, and that sent crude oil prices higher. And then really this week is economic data is the key measure here. We have several reports coming out, and earnings are still happening, but there's not very many, and we are really taking a breather. So the market is really going to look at those economic numbers as they come out. So let's jump into our chart here and take a quick look at the markets. We're going to start with the Spider Index Trust here, SPY, and you can see that we're off the highs here. We are, what's interesting about this is that we're trading a little lower, but we're still in a solid uptrend, and we're above all moving averages. So if I put my moving averages up here, in fact, I'll put even a short-term moving average here, and let me zoom in on this for you. Okay, the blue line here is my 10-period moving average. The red line is a 21-period moving average. We're above both of those. Obviously, we're above the long-term moving averages like a 150. I use a 161. All right, we're above all those. So the fact that we're still in this uptrend, still above all moving averages, everything looks good here on Spider. Normally, what I'll do is put on my hike and a she candles. I'll go ahead and do that. There's not really a need to. It'll be a little green candle, as you can see here. All right, and this is kind of interpreting data. Now we have been trading sideways for about a week, but all that does is really take you to the bottom of the channel and gives the buyers an opportunity to jump in on a market if they begin to see that, okay, market is kind of discounting itself here before the next push higher. All right, now that is somewhat risky. You get to the edge of this channel, you could roll over and trade to the downside. That's where stops come into place. All right, but let's jump over to the NASDAQ, the Qs. Boy, look at this on a hike and a she chart. Look at these little bitty candles with wicks on the top and the bottom. That means a lot of, well, let's just say even trade. The bulls and the bears are just kind of fighting with each other. I'll bring that back to my regular candles, and you can see just that we have been trading sideways. However, the trend is still higher. Now, this is interesting because, you get this sideways trade, and like on the S&P, it really is bringing us up to any type of trend line or channel. This sideways trade, we were really hot. Now we've cooled off. Okay. And the question will be, will the economic data later this week, bring the markets to take even a greater amount of breather, okay, for lack of a better phrase, and drop a few percentage points, okay? And that's what we're not talking about a big crash yet, okay, but just a little pullback, maybe 5-10% wouldn't be bad. Now, IWM, with the higher rates, it did reverse kind of hard. However, it's above support. In fact, it's kind of sitting on support. If I redo my little line here accurately, let me just get on that close there. All right, so we are at support here around 208 flat, and there is some minor support at that level. We'll look to see if we hold this and what the afternoon holds. But when the bond market, when the bond pits close here shortly, then the market just kind of does its own thing, and we could see a rally off the bottom going into the close. If that's the case, this will be a real strong market. Now, let's look at USO. We were talking about oil a little while ago, well up over 1%. We're off the highs, but still just a nice bullish candle here. We did break out of that little pennant that we formed. Where this really stands out is on the hike and a she candles. You can see just 2 solid days of uptrend. This would be our trigger day to go long once again. If we were taking profits or covering, this is the opportunity to jump back into USO. And, it is a place, if you're concerned about fuel prices, well, have a position on something like USO. It's really easy to do that. And you can see that this has been in an uptrend now for a couple of months and moving higher. Let's go back to our regular candles here, and you can see a little bit more chop, but overall, this has just been moving higher, moving higher. All right. Now, going over to the metals, we'll start with gold, GLD here, all-time highs for gold, okay? Now we're off those all-time highs as we pull back a little bit, but still gapping up from Thursday's close. Gold is trading at right now currently at GLD, that is the gold the gold ETF, trading at 207.32 right now, which is still an all-time high. And this has been I've been talking about this for a while, that if you don't have an allocation to the metals, you might want to put a small percentage there. And if you have a small percentage, like say 5% of your portfolio, you might want to increase that to about 10% in light of some of the upcoming news events that are just percolating under the surface, so to speak. Now, silver has been trailing gold, but you can see it's gotten the benefit of a little rally here, a little 3-day rally. It is off its highs. It hit resistance up there at about 23.20 earlier today, and we are trading off of that. We should see silver continue to rally along with gold, and this is just this is interesting because this area for silver is this resistance area is uh, pretty significant. It is a big resistance area, and it's been there for quite a while. And there is much overhead resistance, even just above that level, all the way up to really about $24 for silver to really take part in this metals rally. It's got a lot of overhead resistance all the way up to 24. So a conservative trader may wait until we do break out. If you're more aggressive, you could be long here, but just have stops or have hedges. Just kind of trailing this as the metals show quite a bit of strength. Now, if we move over to the bonds, that's where the action is today. The long end of the curve, TLT. Look at this. The stock is challenging significant support here. Okay, at 92.5. All right, this is where this long-term moving average is. It's also just above these previous lows. At the closing lows were at 92.19, about 92.20. Let's see where that number was. 92.18 was the low close back in February. We are all of a sudden challenging that after a little a little week and a half rally back down. That means interest rates are trading higher. So this is, again, the iShares 20-year Treasury bond ETF. So this is for durations 20 years and longer for TLT. Now, if we look at the short end of the curve, that would be SHY. All right, you can see a pretty significant drop. Now, it's down about 18 basis points today, and that doesn't sound like a lot, but you can see on the chart, that's quite the drop, and it is closed below support. Okay. Support was at 81.5. We have blown through that and are trading below this long-term moving average. That is kind of interesting. That means short-term rates have really jumped today, and the inverted yield curve will then now be increasing once again. We were flattening for a while, and then slowly we've been starting to widen, and today will be the line in the sand where it really it really starts to widen once again. And again, this is all generated by economic data, and we have a full week of it this week, as I'll show you in just a moment. So that was SHY. Now, if we do jump over and take a look at that inverted yield curve, you'll see what I'm talking about here. Last week we were at 1.24. This week we were at negative 1.26. This is as of the close last Thursday before the holiday weekend. With today's data and today's bond movement, this will widen probably to 1.3, I would think, 1.3 or more. And once again, that is not good for really bond structure and the bond markets. This has been inverted for 18 months, and the longer this goes, the more concern there will be over how it affects the other market sectors, especially the equity market, for example. Now, if we jump over to interest rates for mortgages, it is really becoming a case right now where 7% is that hard national average. You can see that we have now traded above and below several times over really since the beginning of the year. And 7 really now is establishing itself as the rate on a national average. Now, what you're seeing here, remember, the blue line is the daily rate. That's the mortgage. That is the mortgage news daily rate, national average. And then the gold and the gray line are weekly rates. So those will only adjust on a weekly basis. But you see that little spike up on the daily, and that is what is concerning. We'll probably get back above 7 on the other instruments later in the week if some of the economic data is consistent with what we've seen from the ISM report. All right. So with that, let's take a look at where we are and take a look ahead. What is upcoming this week? Well, I mentioned a couple things here. I mentioned economic reports and I mentioned earnings. We are really on the back end of the earnings cycle. We only have a little over 200 companies declaring earnings this week, many of them that are not significant. Some notable companies you can see here. We do have Dave & Buster's, which historically is one that we do trade, but with the weekend, a 3-day weekend, and where it fell on the calendar, the trade setup really wasn't there. And then later in the week, we do have Levi's and BlackBerry, ConAgra Foods, and that's really, as far as the notable stocks, that's about it. But we did have, as I mentioned, the manufacturing PMI this morning. Then Wednesday, we have the services PMI, jobless claims on Thursday, and the unemployment number on Friday. Since earnings now really won't kick up for about another 2 weeks, this is going to be the focus. And the way some of these numbers are coming out, we are in store for an exciting start of trading for the second quarter of the year. All right. Now, with that, we do like to trade around earnings. And I keep referring to that because this is a cyclical event. It happens every quarter for most every stock. And it's nice to be able to zero in on certain stocks around that. And if you want to see how we trade earnings, we have a free guide available for you. And you can get that guide from ewotrader.com/straddle. Okay. ewotrader.com/straddle to find out how we trade stocks where we are expecting a big movement. Now, for other stocks, where we don't have a big movement, well, that's what we're going to focus on today. But I want you to get that free guide in anticipation of what's coming in a couple of weeks. Okay. Now, if we move into what our featured trade is for the week, we are looking at Paychex. Okay. The symbol there is PAYX for Paychex. And here we are we're doing what is called an iron condor. And what we are doing is taking in premium. So we are selling premium and in advance of this earnings event. Okay. Now, typically this stock will move about 6% or less. That is what we are expecting from Paychex for this week to remain consistent. And you can see even with that drop, that last earnings cycle event, where our break evens are in the trade, that could encompass, that was a 6.7% drop last earnings, and we are well within that tolerance for this cycle. All right. And so all we're looking here to do is capture some nice premium, and that our reward on this is going to be about, if we're right, could be about $110 to $130. And that is per spread. And if you think about it based upon a portfolio of, say, $10,000, that is a potential 1.3% return on portfolio in just a couple of days, because the stock has earnings this week and we'd be in and out of the trade. And we will show you next week how we did in this trade going into this earnings event. So that's it for this week, folks. Again, quiet on earnings, but big on economic data. Everyone have a great trading week, and we will see you again next Monday. Everyone take care.